Hi everyone, welcome back to ASX Market Watch and charting trend signals around the world. Thank you very much for joining me. Great to have you here checking out the world from a Chartist point of view. We'll start down under just as we usually do, just because that's the market that I personally trade. Have been trading a lot in the industrials sector this week. Quite a few buys coming out and quite a few stocks making entry signals. Last week we did call the industrials sector a little bit of a buy signal right about there. The market is now continuing up, as you can see. Fantastic stuff. Why did we call that? Well, very simple. Just check out this little zigzag pattern right here. Not rocket science in any way, shape or form. Really simple stuff. The price sort of gives us the determination, of where the trend is heading. That's all we're looking for. It's just following the trend. Very simple stuff. And now a similar thing happening on the All Ordinaries down under. As you can see, it's crossed above our downtrend line, crossed above our 150-day moving average, and as you can see, it's made a little zigzag pattern up. This is the operative bar, this one here, because as you can see, it starts low, closes high, and it sort of goes right, thrusts all the way through the 150-day moving average. Now, obviously, it's followed by a weak bar here, but the signal's already been made. You could put your stop loss below the trend line and the previous trough at around about 4,200. That would be that'd be my personal preference there. But again, you could have a lower stop at around about 4,100. But yeah, entirely up to yourself. In the meantime, that's an early entry signal on the All Ordinaries, and a solid entry signal would be still above that 4,400 level. So that's what we're looking for. Very simple. In the meantime, the SP500 still continues upwards, and again, we called our entry signal around about here. The market is still continuing upwards on a short-term basis. Where would we be getting out, or where would we be wrong? A close below the downtrend line, the uptrend line, of course. So yeah, this stuff is very simple stuff, guys. Very simple. Not hard to do in any way, shape or form. It's simply a line on a chart. Your sort of stop loss level would be around the 12.55 level, I would imagine, just below that uptrend line. You'll find that uptrend line will usually give you support. But yeah, really simple stuff. Here's your downtrend line. That's why we called it. A little short-term entry signal right about there, and now the market is absolutely continuing up. There's a lot of fear out there in the world still, and just let me give you a target. I would say we're at one of the targets, which is the 75% extension. So yes, the market may find resistance at 1,300. If not, the next level is 1,380 on the S&P 500, which really gives you quite a decent amount of gains between 1,300 and 1,380. Potentially, well, not a huge amount, but obviously enough to make a decent amount of gains in individual stocks. Similar sort of thing on the FTSE. We did have an entry signal right about here. The market is sort of going sideways and up, so this is not really the best sign. If we were to look at the future and where to put our stop loss, I would really put it below one of these levels, which would be about 5,500 on the FTSE. That's your 50-day moving average, and I think that will actually give us a good amount of support. In the meantime, yes, I mean, definitely, there's still a lot of weakness in Europe, and there's still a lot of jittery nerves and that sort of stuff around the debt. So let's look at a projection in the FTSE as well, potentially. So again, it has met the 75% extension. And 6,000 would be the next level to beat on the FTSE. But in the meantime, yeah, the uptrend still does remain, and I'll just be sort of looking for a close below 5,500 for a short-term exit signal on the FTSE. Really simple. The Hang Seng last week, we said that we had an entry signal there, and the market has continued up since then. So the Hang Seng is looking really quite good. For a stop loss, we'd be looking at below the uptrend line at around about 18,600 now. But yeah, in the meantime, yes, the market has continued up. Yes, we did get an entry signal last week, and yeah, really not too much more than that, basically. Let's have a quick look at a target on the Hang Seng. If we were to look at this, again, not quite at the 75% extension, so at about 20,800 would be the next level of resistance. Maybe 21,000 just to round it off, and then 22,000 would be the 100% extension from there. and that would be your next level of resistance, basically. So very simple stuff, not rocket science in any way, shape, or form. This is the Nikkei in Japan. And yes, again, it has continued up. This one I was much more wary of because there's a lot more resistance overhanging the Nikkei, and that resistance is at about 9,200. Resistance here, as we're seeing, there's current resistance at the 150-day moving average, right smack bang on the 150-day moving average. And what I would be looking for would be a zigzag pattern up, which we haven't really gotten quite yet. We've had a series of lower troughs, but then higher peaks as well. So yeah, it's a bit of a mixed bag on the Nikkei. I'd be very cautious about calling that one, except for the fact that there's quite a lot of resistance at 9,200. So just be wary about the Nikkei in Japan. And that would be the world from a Chartist point of view. Gee, that was simple, wasn't it? As you can see, we've got short-term entry signals around the world. Yes, just be very wary, just manage your risk, keep your stop losses in. But in the meantime, I'm personally buying stocks in industrials, very strong sector at the moment. And utilities is still going strong. Telecommunications is still going strong as well on the Australian market. And that is the world. Hope you have a great week. Until next week, happy trending. Bye for now, guys. Have a great one.